Hello, it is Friday the 11th of April. I hope everyone is doing okay. It really has been a week for the history books, and if you're still here and you're still standing, you may have had a really grim week. You may be quite offside in a position, but whatever else, pat yourselves on the back, honestly, because if you're still standing, you're going to make it. This week has been all about the bond market. Trump clearly didn't care about stock markets falling. What made him pause the tariffs this week was the basis trade in bonds and the bond market blowing up. It's very, very much like what happened to Liz Trump in the UK, and it's still an issue. So the basis trade is a really, really big trade. It's worth around, I think, 800 billion. The problem is that hedge funds put on very large leverage bets, sometimes up to 100 times leverage, profiting on the difference between, or on the convergence in the futures price and the bond prices as futures contracts approach. So they put on very large bets on assets that usually only move very small amounts. It's like trading, it's like trading the dollar, which doesn't move much without most FX, you kind of use quite a lot of leverage to trade usually because it doesn't move very much. And treasury markets are very similar. This week, of course, with all this instability with tariffs, mean that there have been very big moves, and these treasury bets get offside, especially in the futures contracts. And so we see huge divergence and markets moving that they shouldn't. For example, yesterday and today, we had really good US CPI, and today we have just had negative PPI, which is the Fed's favourite measure of inflation. So really, we should be seeing yields come down. Inflation is coming down. Oil prices are underneath $60. That's really good for getting inflation down. The problem is, though, that we're not seeing that in the bond market. So I want to talk about crypto today, but really we need to talk about these bond yields. So this is the 10-year Treasury note. This is the benchmark asset that everyone's looking at. It's really what the kind of world looks at in terms of treasuries, and it is not coming down. This red candle, this is where it got so nervous that they paused the tariffs, and now we are trading above that price point. This is all on, we could say this is really about escalating trade war tensions, because although we've postponed the tariffs for 90 days, we really haven't resolved anything. And the one thing that the market really doesn't like is uncertainty. And certainly the rhetoric between China and the US is not helping this uncertainty at all. So we could still see another nasty shakeout in markets. This is what the US 10-year looks like. This is the 10-year bond price. And if we look at this, ever since we made a high back in 2020, every one of these rallies has been a really obvious three-wave move, which means it's a correction. Sometimes they're bigger than others, but it means it's a big correction in a downtrend. And even from this low in January, when Trump was inaugurated, this is now looking like a three-wave measured move, and we are going to continue lower in these bond prices, which means yields higher, which means nobody's mortgage is coming down anytime soon either. And I do worry that these trade wars, especially with China, these other countries are huge holders of US debt, and them selling US treasuries at the same time that the US government is trying to sell treasuries because they have so much debt to roll over could cause a real problem. This problem that they paused the tariffs for this week hasn't gone away. That's my message. And so potentially, although we could say, crypto's holding up really well, and everything could just be fine and we can buy the dip, the problem that caused all of this hasn't quite gone away yet, and we are seeing really big falls in the dollar as well. So that's where we are. Let's take a look at Bitcoin. Big picture from the low that we made in this most recent swing when everything bottomed in August 2024. We've got clearly very nicely 5 waves up, and we are sideways holding this 50% retrace level, holding the weekly 50 moving average, which has been really good resistance back in July, the summer of 2024. Everything, this looks like a really nice pullback in an uptrend. It also looks like a pretty nice, swing failure pattern double bottom where we made a marginal new low. And this, to me, if everything else was fine in the world, I'd be like all over this, buying the dip. This is 5 waves up, but I said before, potentially this is not all over, because this could be just wave 1 of a bigger wave 5, which crypto tends to make. So that means if you are looking for something to hide in, I think some crypto is looking pretty good, but you really kind of need to have a plan and for if everything goes wrong, because other markets could pull the crypto market down. So if you're sitting, we've had this really big recovery. Yesterday I said if we pulled back to and didn't close back underneath this 50% level, which is at 79,285, then we look pretty good for going higher. But this is kind of one of those days where it's Friday, we could see de-risking. I'd really like to get today out of the way if we are going to continue higher. And then at the weekend, when the bond market is closed, potentially we could see a little bit of a crypto lift if everything doesn't crater. But it really is, unfortunately, all about the bond market. And I think if you're going to take really big leverage positions, you really need to see things improve. And it wouldn't be the end of the world just to step back, let it calm down. If we look at this logically, whenever all of your moving averages go flat like this on the daily, this is a daily chart, and everything is going sideways, really you're in a little bit of a sideways range. Do you want to buy dips? Yeah, but you kind of also don't want to take unnecessary risks. And I think today, I'm watching this bond market might be kind of one of those days. Really everything else is looking really good. Inflation is coming down, oil prices are coming down, but this tariff uncertainty and trade war stuff and what's going on in the bond market really isn't helping. The bond market is bigger than the stock markets, and it's really kind of the market heartbeat. It's the most important market. And so that chop and this sideways range trading may persist until this is sorted out. So I like this. If you put a gun under my head, I like crypto and I like Bitcoin on the long side, mainly because we're very close to where for me today, I know I'm wrong. We continue lower. If we get underneath 79,285, and this is an hourly chart, this level, which we were talking about, is where we found support. If we get back underneath here and it becomes resistance, we are going lower. And so for me, if you can buy pretty close to where this would be bearish, if you can buy pretty close to where you're wrong on pullbacks, I think it's what I like to do, but I just think maybe waiting, because potentially, we've done a big 3-wave rally here. We kind of need to continue higher and everything to be okay. Now, that might happen. We might get another face ripper rally if they step in because of what's happening in the bond market. Not sure quite what they're going to do. But if you've had a really brutal week, this might be not the best day to go out swinging for the fences. There are some charts that I really like and some stuff that's holding really good support levels, not just Bitcoin. I really like how Ripple is holding this 50% retrace level. I really like this false breakdown in Ripple. We're holding back above those April 2021 highs in this one. I really do like these false breakdown levels, and I clearly know where I'm wrong. If we get stuck underneath 184, in other words, if we got back underneath it and it becomes resistance, we're going to continue lower in Ripple. So this is one that I've got my eye on. There's a few other charts, for example, like Fetch AI. I have been watching this one for a while. Let's zoom out on this one. This is a big kind of 886 fib level. I like this bottoming pattern that we're making, but this is the kind of resistance. This is where if this is going to be a kind of bottoming pattern, we need to hold above 0.45. I'm keeping my eye on this one. Fetch is one of my favorites, but pretty much everything else I think is going to follow Bitcoin. And today is just one of those days not to be a hero. If you are trading, watch the bond market. That's all I'm going to say today.